This environment is very different than any other business cycle we've been through. I think you have much stronger sort of secular pressures certainly on the developed economies and the global economy. Going forward, we think that the central banks, despite the Fed probably going to be raising interest rates, liquidity is still abundant in the global economy. When we're really looking at asset mix within the income fund, we're looking at it from two perspectives. One is the secular, so the very long term, and there we still see a slow growth environment, particularly for developed economies, and that'll keep interest rates very low. And then on the shorter term basis, that's when we're looking at the cyclical, which is we're in the uptrend of the business cycle. So we're heavily weighted towards the equities in the portfolio, and we expect that to continue, at least for the near term. A lot of time we get the question in terms of why invest in income with interest rates very low. And there's really two benefits to income in your portfolio. One is we don't know the future and you benefit if there is deflation risk. And two, more importantly, we've seen over many, many decades that investors typically buy high and sell low. The reason why they do that is because the emotion takes over. And when you have income in your portfolio, that keeps you in the market because you're not as concerned that your portfolio is down a tremendous amount, because it won't be down a tremendous amount. When you look at the performance of the Balanced and Income Fund over the last few years, and you look at what the bond market's produced, the income fund has actually produced about 3% more. We have a higher quality approach to equities, so we tend to avoid the big blow-ups in the equity market. The first half of 2015 looks to us like you're going to see continued expansion in the US. Europe probably surprises to the upside. It was beaten down in terms economically last year, and there's room for upside in Europe. There's always something going on in the market. There's always something going on in the world geopolitical, and those buffet the markets at different times. But if you stay invested, stay focused on your long-term financial plan, that's the best thing you can do for your investment returns.